So for those of you who used last night's game plan, you should have had a phenomenal green day today. I made it very, very clear. If the SPY drops under 560, it's going to have a quick drop to the break and retest level where we are interested in buying call options at 557, literally towards the exact lows. And there was also a green, red, green bullish 30-minute candlestick confirmation at the 557 break and retest level. And I also made it clear, if the SPY goes above 561, it's going to be a strong bullish trend day, and you're going to want to be buying call options. There were several opportunities to be buying SPY call options on the dip at 561 and also slightly above at the higher break and retest levels towards 562 to 563. If you use the game plan, you should absolutely crush it today once again. Every single game plan that I've given you this week was 100% spot on. In terms of the trades that we ended up making, I'm going to be going over all the trades that we ended up making. It was over a dozen wins, barely any losses. I'm going to be breaking it down towards the end of this video. But first things first, we have a lot to discuss with this massive move that has occurred during the extended hours trading session. I'm going to prepare you to trade the best setups at the best prices. Let's get straight into the new levels. So in terms of the SPY, if you watch the video analysis that I posted Sunday, I brought a lot of awareness to this weekly chart pattern, where in terms of the weekly chart pattern, if it were to repeat itself, and as of now, it is showing all signals of this weekly chart pattern repeating itself, the overall trend has finally kicked in, and I explained to you how it could be potentially a bearish week from a technical view. This was the weekly pattern that we spoke about. You can see right here, we had this green weekly candle, then we had this red bearish candle facing to the downside. Next week, SPY had a small spike above the previous week lows, then it ended up selling off 17 points below the previous week lows, then it started to recover as the week was ending. So in terms of the overall weekly chart pattern, you can see a lot of similarities. We have this green weekly candle right here, green weekly candle right here, red facing to the downside here, red facing to the downside right here. And then the SPY ended up spiking higher than last time, so the pattern ended up repeating in similar cycles. And then as you can see, if you check extended hours, we ended up dropping, I believe, to the 542 range, and the SPY ended up having a very nice sell-off during extended hours trading session, going under the previous week lows, which was at 555, right? So, I mean, if you measure the overall move, we are setting up for a potential bottom. In terms of the potential bottom, it's going to be in between that 539 to 542 overall range. As of now, the SPY has already bottomed at 542. I mean, the absolute lowest I think we can go in terms of this week, and that's just if this quickly sells off, would be 539. I'm telling you, low 540 to 539 would be an auto buy zone for calls, because we're having such a massive pullback, and based off this weekly chart pattern, it's not supposed to have a very bearish weekly close. It's going to close bearish on the overall week, but it's supposed to have a bullish recovery once we're oversold, and right now we are in oversold territory in terms of if it were to drop back down to 540 to 539. Right? So in terms of the SPY, you need to be aware of the overall measured move like I explained to you. I mean, in terms of last time, it literally dropped 17 points below the previous week lows, but this time it did end up pushing higher, but the volatility is at like literally, you know, massive like all-time highs at the moment. The volatility is fucking insane right now. So it is going to be a bigger move than that overall last situation that I gave you. But overall, I'm telling you, the perfect range would be that 539. And if you go back historically, you can see right here, we have a gap at 540.50 to 539, a lot of key strong support towards this 539. And then below that, you have 533. So those are all automated buy levels. So I'm going to give you the ladder. I'm going to give you the best levels to trade at. I'm going to explain to you in terms of, you know, my overall views on the situation from a technical view. So in terms of the SPY, based off of the daily chart pattern, I want you to understand that this is bullish. This daily candlestick right here that ended up forming is very bullish. And heading into tomorrow, based off the daily chart pattern, along with the weekly chart, if you looked at the weekly chart, look, I'm going to show you in terms of the recovery. This was the recovery with the overall pattern. So you can see right here, it literally dropped like 17 points below the previous week lows. We're comparing this pattern right here to this pattern right here. And then in terms of where it bottomed at 582 and it closed at 594. So it ended up recovering, towards the end of the week. And right now we're bottoming towards key oversold levels. So there's likely going to be a bullish recovery into the close of this overall week. And we're going to be focused, especially heading into tomorrow, to be buying call options at key oversold levels. And then if the SPY is reacting bullish at those oversold levels and we're buying calls, or just in general, if we're seeing break and retest opportunities to follow this overall bullish trend, we're going to be buying call options in a sense. So just looking at this overall daily chart pattern, I'll show you one, overall pattern in terms of history repeating itself. You can see right here, SPY was oversold. It formed this green bullish candle right here, green bullish candle right here, same exact pattern, green bullish candle right here. It ended up gapping down, going below previous closing price in a sense. It ended up gapping down, and then overall it recovered. So it could take up until Friday to recover. But I mean, if you look at what happened last time, this is so key. Look at this recent pattern. You can see this is a strong green bullish daily candlestick right here. Strong green bullish daily candlestick right here, daily candlestick right here, nearly identical, and identical levels, right? And if you compare this daily candle right here to this daily candle right here, next day, the SPY ended up gapping down. Overall, it was a bearish day where it sold off for the vast majority of the day. And then the next day, it ended up exploding up, gapping up, and filling the gap that is waiting to fill above. We do currently have a gap that is waiting to fill above at 564.50. But I'm telling you, man, in terms of opportunities, there's going to be opportunities for puts and there's going to be opportunities for calls. In terms of the move being so massive and in such, in terms of making an overall video analysis the day before, is going to be a bit more difficult in a sense, which with such high volatility, to make a perfect game plan a night before. But this is what I can give you in terms of advanced, right? I would really focus on the more oversold levels and the more overbought levels. But I'm going to give you the price ladder. I'm going to explain to you in terms of what it is that I'm seeing and what to focus on. So first things first, let's talk about auto buy levels for calls. So in terms of auto buy levels for calls, this is what I'm going to have for you, right? So in terms of the SPY, the first auto buy level would be towards 540. There's a gap at 540. It's key strong support. Last time we bottomed at 540 towards September 11th right here. It was a massive green day to 555. So 540 would be an amazing level to be buying call options. If the SPY were to drop under that somehow, some way, the next level where we would be auto buy call options would be at this break and retest resistance level towards 536, and then the gap close reversal at 533, right? So if SPY reacts bearish at 544, drops under, reacts as a resistance, it's going to sell to the overall zone. Not interested in buying puts in that particular situation because there's going to be a strong bullish recovery into the end of the week, and we are approaching the end of the week, right? So I'm telling you, auto buy calls, 540, 542, in between that zone. If it reacts bearish, we're going to re-auto buy calls in between 536 to 533, swaying away from puts at the lower levels. So that would be the first game plan that I can give you, and that's the most oversold territory where it should work without a doubt. And in terms of trading zero-day options, with the massive moves that are going to occur, it's not going to matter if the first zone didn't work out, right? If we didn't bottom at 540 and we went to 533, play both trades. Get in automatically at both the zones. It's not going to fucking matter. One of those trades is going to go up the bare minimum 200% plus. It's going to be a very strong overall bullish day. If not tomorrow, then likely Friday. The opportunities are going to be fucking crazy. So the win rate's not going to matter. You should have at least a 50% win rate. And when one of those plays hit, it's going to be a massive percentage gain where if you just hold the calls with the overall bullish trend day, right? I showed you on the daily chart how tomorrow overall could be bearish and it might not be up until Friday. But we're going to be paying attention to the reactions and not just the daily chart foundation. But like I said, in terms of the daily chart foundation, it is showing signals where it could potentially be just an overall bearish day and the bullish recovery isn't until Friday, right? We're going to be using confirmations to confirm when that exactly is. But like I said, in this particular situation, the moves are so fucking massive that having a 50% win rate, in a sense, you should be able to be extremely profitable if you're holding the 0s for the massive big percentage wins, making at least 200% bare fucking minimum. So in terms of the next levels, let's get into this. So we ended up on at 542, and then you can see right here, we have some resistance. In terms of the resistance was towards 545 to 546.50. We got some resistance right here. Then we have a break. Then we have a retest. It's trying to react to support, right? So that's kind of like your middle zone. And then in terms of key levels to be watching, this is really going to help shape the overall trend heading into tomorrow, these would be the key levels that you really need to keep an eye on heading into tomorrow. So I'm going to go a little bit further back just to show you in terms of if there was multiple sequences here. So yeah, there was multiple sequences. So you can see right here, this 549, 549, 550 to 51, 549 to 551, very key. So the SPY ended up going under 549 to 551. Once it went under that, we had a strong 8-point sell-off, massive sell-off into the 542 range, right? Massive sell-off. So with that overall range, if it breaks and reacts as support, the SPY is going to start to explode up to the next level. So if we're breaking above 549, reacting as a support level, the next level that the SPY is going to go to is going to be the following: 555. So if you're seeing 559 to 546 react as strong support, you can attempt to buy calls. But if you're doing this, you're going to need the best confirmations. I'm telling you, it's going to be a bit more difficult to trade in terms of this overall game plan that I'm giving you. I explained to you how in terms of the bullish day, it might not be up until Friday. We're going to have a clear confirmation in terms of Monday, but I'm just giving you some preparation before the overall market. And in terms of the preparation I'm seeing, it's not going to be the easiest day to be trading tomorrow. Based off the past 3 game plans that I gave you, it does appear that this is going to be the toughest one to overall trade in terms of the night before. But you need to understand that 549 is make or break. If it reacts as a resistance level, we drop back down to 545. If that holds, we spike back up to 549. If we break above 549, that reacts as a support level. Next level we go to is going to be 555. Now, in terms of best levels heading into tomorrow, as of now, that I have for you for puts, it's going to be the following. 555. This was key previous support, just like 549, was key previous support, right? Except this level is much higher and it was a normal trading hours level. So I would say 555, once we test, it can drop first. So if you are seeing bearish reactions, if you are seeing resistance, bearish 30-minute candlestick confirmations at 555, you can try put options for a scalp on that overall trade. Now, the level that I have above that, very unlikely that it's going to hit, but there is some levels, man. In terms of the levels above 555, in terms of next overall levels, looking at the 1-minute chart here, you can keep your eyes on, 566. That would be an automatic level to be buying put options. Previous closing price, 564.50. That would be an automated level to be buying put options. In terms of the overall 30-minute chart, right? So if we're pushing above 555, next overall level you can keep an eye on is this zone of 561.20 to 563. Those are going to be all the ranges and all the levels in all the zones, right? In terms of the more easy plays with this overall game plan, you can focus on the more higher levels and the higher zones for puts and the more lower levels and oversold levels for calls, right? That's just like I said, man, based off of the overall daily chart is going to be a bit difficult in terms of the foundation. So heading into tomorrow, we're really going to be focused on if it's going to be a bearish or bullish trend day. But this is what I have to say, man. If tomorrow is a bearish trend day, I will likely be swing trading calls before the market closes. Right before the market closes, if it does end up being a red bearish day where the SPY doesn't recover and close green and start to fill the gap towards 564.50, in that situation, I'm likely going to swing trade calls that expire Friday likely. If you like, you can give it more time. But in terms of the overall trade idea, it's really focused on Friday expiration. So in terms of the swing trading idea, is something that I rarely do, but typically there's like 2 to 3 opportunities every single month. The last one I gave you was literally for free on the overall video right before the market closed. It was 100% went on SPY calls. But in terms of this swing trading idea, if tomorrow is a bearish day based off of the daily chart pattern, and I showed you the daily chart pattern, man, look, this is simple, man. So in terms of this game plan, you can gain a lot of clarity and some great information and profits from this idea right here, trying this one out. You can see right here, you have the green daily candlestick, Next day we gap down. Next day we're currently gapping down. So history is repeating itself. Before that, green bullish, right? Pattern's been going for 3 fucking days now. So if we're closing red and bearish and not exploding up to fill the gap like this, similar, then I'm going to swing trade Friday 0 dates. That's what I'm going to do, right? Like I said, if you want, you can give it a little bit more time till next Friday, but you really don't need that much time. I mean, you could even try 2 strikes if you want, because both could work. But my main focus is going to be swing trading call options right before the market closes on Thursday if SPY ends up closing as a red bearish gap down, like it ended up doing last time this pattern formed. And then if I do that, what I'm going to be looking for is next day on Friday, if it gaps up, a strong bullish trend day, and then sell into the move, because it's going to try to have a Friday sell-off into the close like it did in terms of this pattern, right? And also, you just need to understand in terms of the weekly chart pattern, the best fucking thing you can do is buy calls at oversold levels and buy puts at high resistance levels. It's going to be a bit more difficult to find the tops on puts. So look at all the levels I gave you for puts and use the best confirmations, right? There's going to be opportunities to be trading both ways. Tomorrow could be an overall bearish trend day, right? But what you need to understand in terms of where this week can close, it's going to try to have a strong recovery. In terms of the last recovery, it bottomed at 582 and it ended up closing at 594. A fucking 12-point recovery from the fucking lows, right? It's going to be a bit more difficult in terms of estimating that and calculating that, because, you know, we're already having a strong recovery during extended hours at 542.20. So this such a massive move is going to make the history repeat itself, not to an exact T, but into a similar cycle. But in terms of like how that history has repeated itself, I mean, if you compared the overall pattern, this time it ended up going up. It went higher than it did last time. You can see right here, it bottomed literally barely above the previous week lows. This time it went a lot higher above the previous week lows, and now it's selling the fuck off, right? So I'm telling you, man, calls towards oversold territory, and I gave you the oversold territory, 533, 536, that's a zone to scale into calls, right? 539 to 542, that's a zone to scale into calls, right? Obviously, the lower levels of the zone are where you want to put more size. And then you can keep an eye on the middle. The middle is right here at 540, 550. Those are the main levels for overall calls. And then what you need to understand is, you know, we crack support at 549. So if it reacts as a resistance, we start to drop back down. It could be a key level of interest for puts. You know, we just had such a massive move. We just went under 549, and then we dropped 7 fucking points from 549, right? If you're going with the 551 in that particular situation, then 9 fucking points. If you're going with the middle, like I said earlier, 558 with 550. But the point is, you know, we had a breakdown here, and then we had a strong crack, and now we're retesting. So it's going to attempt to react as a resistance. But the issue with that overall strategy is it cracked through so many fucking levels, man, and it never retested. So if it reacts to support, it's just going to keep on trying to push to the levels where it cracked to. So if you look at all the fucking levels that were never really retested, I mean, let's see. Let's go back to the 1 minute chart. We'll break it down by the 1 minute and 30 minute. So you know, this level in a sense, it was barely retested, man. This 555, that's a much better level to focus on with the breakdown retest strategy. Next level above that, you can say, is towards 561 to 563 zone. Phenomenal levels to be buying, put options, auto buy towards that zone. And then a level right here, another auto buy level, is 566. If you watched my video yesterday, I literally told you if SPY goes above 561, the only level to buy puts is above 566 to 567. I kept on telling you that the SPY was going to have a gap close reversal because it could potentially have a bearish overall week. But even if there is a break of trend, which there was today, there was a break of trend where the bulls were showing up, it's going to try to reverse at this gap. And surely enough, it did end up reversing and crashing and pulling back first once this gap ended up filling right here, which was literally at 567.30, man. I'm telling you, you're going to see it happen all the time where news events come out at my particular levels and they work within the side that's favored on the first initial move. Every single game plan that I've given you this week was 100% spot on and right. You should be crushing it every single fucking day, man. So those are the game plans, man. Like I said, just to quickly go over it, it's going to be a bit more difficult in terms of a night before with these levels because the move is just so fucking massive and there is some lack with the daily chart foundation. But in terms of the weekly chart says there's going to be at least a 10-point plus recovery from the overall lows. Now, one of the issues I'm having with that thesis is we already recovered massively from the lows during extended hours, right? So if it were to be during normal trading hours, wherever we start to bottom towards normal trading hours heading to tomorrow, it could be a 10-point recovery beginning Friday, if not tomorrow, right? So that's just one thing to keep in mind. Like I said, one of the difficult parts about that is we already bottomed towards extended hours. So what would make it so much fucking easier if we dropped back down to the extended hours lows to then just auto buy and hold those fucking calls. And if you're buying calls at oversold levels heading into tomorrow, what you can do is go with a Friday expiration and then just hold it overnight. That is something you can do. And I would even encourage that in a sense, because one thing to keep in mind is if we're not going to have a bullish recovery tomorrow and we're buying calls at oversold levels, we're likely going to be down first. You know, it's not going to be the most bullish overall close like we've been having overall. That could be the potential outcome. But on Friday, I'm telling you, if we have a bearish gap down and tomorrow bearish gap down and we close like that, on fucking Friday we should gap up and we should start to have a strong bullish overall recovery. So the easiest play I'm seeing is a bearish close for tomorrow where it just gaps down and closes overall bearish daily candlestick, and then just to swing trade calls for Friday. That is the number one game plan I have for you in terms of the overall nightly video analysis. Like I said, man, once we see where we're at in the morning, it's going to be a lot more spot on and a lot more accurate. This is more of just giving you a price ladder of overall ranges with some strategies. But in terms of the use out of this as well, focus on the oversold levels and the overbought levels and information I gave you. Like I said, there's going to be a 10-point plus recovery towards the lows. Right now, the current lows are at 542.20. So we have an idea on where the potential lows are, but there is going to be some sort of strong bullish recovery. If not tomorrow, then the next day. And you should be able to be profitable with a 50% win rate trading far out of the money zero dates. And I even explained to you, like, if you did end up buying calls tomorrow at oversold levels and it didn't recover, you can literally swing trade it if you go at Friday expirations. That's one idea I have for you, right? But I'm telling you, heading into tomorrow, based off of the daily chart pattern, the daily chart pattern says that it's likely just going to try to be overall bearish. Now, there will be some dip buying opportunities, but heading into tomorrow, one of the easiest game plans I can give you is just put options at key resistance levels, right? And in terms of those key resistance levels, I told you, 549 to 552. 549 to 552. In between that zone, red bearish 30-minute candlestick confirmations, red, green, red patterns, bearish resistance, buy the puts. The next zone, 555, I would consider that like an auto buy zone. 555 an auto buy zone. Another auto buy zone, 561 to 563. That is all fucking puts. Focus on puts towards those upper fucking levels, right? In terms of calls, this is the middle level where we can bounce first, but it's not the best level. Use a strong confirmation, 545.60. Auto buy level for calls is going to be 542 to 549 to 539 zone. Next auto buy zone below that is going to be 533 gap close reversal, 539 gap close reversal as well. But 533 gap close reversal is the lower one. And then on 536 is a break and retest resistance level. That's what I have for you in terms of the overall ladder. 533, 536, auto buy call zone. 539, 540, gap close reversal, auto buy call zone. 542, just key support. 500, where we bottomed. It could bounce first since it had such a strong bounce. When it retests 542, it could bounce first. Key support that has not been tested. That's a strategy that's been working very well in an overall bullish market. If it drops back down to 542.20, it's going to try to bounce first. Key support. 504.220, look for a scalp on calls. Next level above that is going to be the break and retest, 546. Next level above that is going to be the zone of 549 to 552. Key resistance, buy to put options if you're seeing the bearish confirmations. Auto buy level for puts, 555. Auto buy level for puts, 561 to 563 zone. That's the game plan. Scale into the zones. Focus on the lower zone, the lower levels in the zone for calls with bigger size, and then the higher levels in the zone for puts with bigger size. Use the confirmations, with the 30-minute chart. Confirm if it's going to be resistance or support. That's what I have for you. And then, like I said, based off the daily chart, it could be a potential bearish trend day. So focus on those puts towards upper resistance levels. And if it is a bearish trend day, swing trade calls right before the market closes, right? That is the game plan. That's what I have for you in terms of a night in advance. Now, with that being said, man, a lot is going to change. A lot is going to alter, right? We're going to have new game plans, new informations heading into the market open. But this is what I'm going to be giving you in terms of a night in advance. And I explained to you in terms of like high confidence situations to be aware of. We could see a 10-point recovery from the lows into the end of the week. So in terms of the lows, one of the issues I'm having with that is we already bottomed at 542 during extended hours. So if we retest 542, I'm definitely going to be buying fucking calls at that level because, like I said, man, a 10-point recovery from the fucking lows. But it could be normal trade lows where we don't even retest 542.20, right? And then it just keeps on fucking spiking. But if not, it's going to be towards that lower fucking zone of 542.20 to 539. We'll know by the overall morning, man. It's going to be very simple. We're going to absolutely crush it, man. And then, like I said, just swing trade the calls if it's a bearish overall day, and then focus on puts on overall bearish ladders. And I gave you the ladder. If one of the levels reacts, bearish, it's gonna drop down to the next level. If one of the levels reacts bullish, it's gonna go up to the next level. Even if there is a bearish or bullish strategy at the overall level, focus on the reaction and the confirmation at the overall level, which is the understanding that into the end of the week, we're supposed to have a strong bullish recovery. So the easiest fucking plays are going to be calls on oversold levels. The oversold levels are going to be 539, 542, and 546. Those are going to be our oversold levels. The lower the better. And if that zone doesn't fucking work, then the next zone, 533, 536, right? And the best thing you can do with this situation, like I said, swing trade it. Just fucking swing it. Swing trade Friday expirations. If you're already up enough, just close out the trade. And if it closes bearish, then in that situation, just re-enter a trade and swing trade calls before the close. Or you could just leave runners on the other trade too and do both, right? And then just for puts, best information is just the higher levels, starting at 549 to 552, 555, and 561 to 563. That is the game plan, man. Use that fucking game plan and print at the speed of fucking light, man. Be patient, give things some time, with high volatility like this. Best thing you could do, focus on the best confirmations at the overall levels, focus on the oversold levels, focus on the overbought levels, have that understanding in terms of this overall week. It's likely not going to close as a bearish week. Tomorrow could be one of those days where it's overall bearish, but it's likely not going to go under 540 fucking 2. We gap down so fucking big. It's very low probabilities that we go under 542. And if it does, I don't give a fuck because I know how to be successful with a 50% win rate. And I'll be happy in that situation because the bullish recovery will be fucking insane and the options will be so fucking theta decayed once it goes to 533 to 536 zone for a bullish recovery. But the point is, it's very likely that we really drop under like 539 to 540. So we have an idea on the best levels to be buying calls, 542, 540 and 539. And if it doesn't work out, then like I said, 533, 536, 50% win rate, you're going to fucking crush it because there should be a 10-point plus bullish recovery. And it's already recovering, 8 fucking points, nearly, it's already recovering fucking 7 fucking points here towards this 542.20 low. The extended hours is making it a bit more difficult. But once we have time within the normal trade hours, we're going to know like the exact best fucking level. If it's going to be a little bit higher or 542 or just a little bit lower. But in terms of overall market trends, 542.20 without a doubt is a strong buy and hold level for the SPY if it even goes back that fucking low, man. It's just not going to be one of those situations where I'm telling you tomorrow, it could just be an overall bearish day where we sell off from the key resistance levels that I gave you and stay the fuck away from calls, right? In terms of calls, the best thing you could really fucking do is wait for an oversold drop, buy and hold for Friday, right? And I gave you the oversold levels. It starts at 546, then it goes to 542, then it goes down to 539, and then the levels before that. So it's zones, right? And if the market closes fucking bearish tomorrow, just swing trade fucking calls, man. That's what I would say for calls. That's the best way to play it. In the meantime, I would tell you, focus on puts towards the upper resistance levels that I gave you. Use the best confirmations, man. Based off the daily chart, it's going to try to be bearish tomorrow and then bullish Friday if it is bearish tomorrow. So tomorrow, I would encourage you to focus on puts at key resistance levels, sway away from calls unless we hit oversold levels. And if you buy calls at the oversold levels and it doesn't work out as a day trade because it could be a bearish closing day tomorrow, like I said, best situation if you're going to buy fucking calls tomorrow, what I would do is I would go at a Friday expiration. Something I rarely do, but like I said, on the daily chart pattern, I'm seeing a strong bullish recovery right before the week ends. So if it's not going to be tomorrow, it's going to be fucking Friday. And if we're hitting oversold levels tomorrow, even if you're down on the initial play, if you have one more day, they could still fucking print and it's a better situation. Or on calls, if we have a bearish day, just swing trade the calls right before the market closes. Or you can do both. Just understand that's what the daily chart pattern is seeing. Now, that doesn't mean that that's what is going to happen, but we're going to be using confirmations on the 30-minute chart and the daily chart to confirm exactly what's going to happen. I gave you the best levels. That's what you should be looking at and using as of now. And I'm telling you, there's going to be some big updates heading into tomorrow. Make sure you're in Team Roar. We're going to absolutely crush it. So that's the overall game plan. That's what I have to say as of now. The bearish trend has, finally kicked in. So, with this massive drop, it's just very unfucking likely that we have a strong bullish closing overall week. It's just the drop is so fucking massive to have a strong bullish closing week. We would just have to keep on uptrending straight the fuck up, meaning 549 needs to turn into a floor immediately, 555 needs to turn into a floor immediately, 561 needs to turn into a floor immediately. So with the drop being so fucking big and so massive, it's very unlikely. However, it happened very, very quickly. So if it quickly recovers, there is a fucking chance. But like I said, man, based off of everything I explained to you, man, focus on fucking calls at the oversold levels. Look for the swing trade opportunity if it's a bearish day tomorrow. And then focus on the puts towards the overbought levels. Use the confirmations. Heading into tomorrow, be extremely meticulous with the confirmations. And as of now, man, I'm telling you, looking at this daily chart foundation, this could be 50-50 in a sense. Because you need to understand as well that, what's complicating this is I'm seeing situations on the daily chart where it could be something like this, where if we gap down, it's just an overall bearish day and you're just going to want to buy fucking puts, right? And sway the fuck away from calls. Now I'm seeing other situations as well where it could just be bullish and start to recover to fill the gap. But based off of this overall weekly chart, man, we're clearly swaying away from a bullish close, and the weekly chart pattern was bearish. So the overall trend is bearish, and in terms of the situation on calls with this weekly chart, we're due for a bullish recovery, and it could be 10 plus points, and we're already recovering during extended hours. So it's like, in this particular situation, best thing you can really do is just look for put options tomorrow at the higher levels, and then for calls, look to buy at oversold levels if we drop tomorrow, hold into Friday, or, and the best easy money would be if we have a bearish day like this tomorrow where it doesn't really recover that much, swing trade fucking calls. Only swing trade calls if it's a bearish close. Heading into tomorrow, we should gap up and we should really start to recover into Friday, man. So, preferably, what I would prefer to happen in this particular situation, I think the easy money heading into tomorrow would be, bearish confirmations at the three zones I gave you. It could be one of the three zones. It's likely going to be within the first two zones. Very likely that third zone towards 563 hits. But, keep an eye on 550 zone, keeping an eye on 555 zone. Put options towards those zones with the best bearish confirmations, right? The only hard part tomorrow is going to be finding the exact levels. So if you're having trouble finding the exact levels, you can just wait for a massive pullback first. And then if it spikes back up for a double top bearish confirmation, then you know the exact zone to go with, right? If not, then just look for bearish confirmations when the level is first tested, 550, 555, no confirmations, wait for the next level, right? That's two ways to do it. But like I said, man, just puts towards major resistance levels. Heading into tomorrow, be extremely careful and cautious with calls. You can try oversold levels if the best confirmation is there. But overall, what I would prefer is just, like I said, puts at the key resistance levels I gave you with confirmations. And you can also just wait for it to crash first. And if it spikes back up, short the double top. If there's confirmation, right? We do both in certain situations. It depends on the overall situation. And then just swing trade fucking calls before the market closes if it's a bearish day. And like I said, man, we're going to be able to confirm if tomorrow is the bullish fucking day. But in terms of most likely outcome would be that tomorrow is going to be great opportunities to focus on puts, to short the bounces at the best resistance levels that I've given you, right? Look for break and retest. Look for the breakdown retest where the SPY hits a key resistance level. It starts to crack under support, spikes back up to that previous support towards previous resistance, short the retest. Short the bounces could be the potential overall play for tomorrow, and then swing trade calls on a bearish close. That's what I'm favoring, right? And that's what I'm going to be looking for. In terms of this overall bullish situation, man, it's very tough to be wanting to buy calls at these higher fucking levels. We just had a massive sell-off, and it's due for some breakdown and retest where, the SPY has cracked through this support, This support hasn't retested, so when it starts to retest, it's going to try to drop first and react first. The daily chart is indicating it could potentially be a bearish gap down overall day to just short the bounces towards key resistance levels. Like I said, if you're seeing major resistance throughout the day and a big sell-off and it spikes back up to that previous resistance, even if it's not at the level, you can try puts if there's the bearish confirmations. If you're seeing a major crack of support and it spikes back up to that previous support for the breakdown retest, even if it's not at the level, you can try puts as well to short the overall bounces because it could be that strong bearish trend day. What I would prefer tomorrow is a strong bearish trend day and then to swing calls before the close in a strong bullish fucking trend day heading into Friday. That's my preference, and we're going to be able to confirm if that's what's going to happen tomorrow. I told you what to look for. Just look for resistance at the overall levels, look for pullbacks, look for breakdown and retest, look for double tops, triple tops, situation like that, just bearish confirmations. Like I'm saying, man, like tomorrow, if these levels can't react to support and we're just maintaining resistance, it's just going to be one of those days where the bulls can really get fucking destroyed. And it could just be an overall strong bearish trend day throughout the entire fucking day. We're just going to want to sway away from fucking calls, man. So just be very fucking cautious with calls. And I'm saying that because we had such a massive pullback. The key support levels where we cracked have not been retested. And when they're going to be retested, they're likely to drop first. And in this particular situation, when it comes to an auto buy level where the move is so big, like this move right here from 570 to 542, when it comes to automatically buying puts using the breakdown retest strategy. So this was key support right here at 563. When it cracked, it was never retested. This was key support at 561. When it cracked, it was never retested. This was key support at 555. When it cracked, it was never retested. This was key support at 549. When it cracked, now it's starting to be retested and it's just fucking sitting. So the point is, when it comes to coming up with an automated buy level, the best thing you could do is just go with the level when you have multiple cracks to support, just go with the highest levels. So the highest levels would be like towards 561, 563. Instead of going with the lower levels, just automatically get in towards the higher levels. That's where it's most likely to crash instead of going with the lower levels. But the strategy can work at all of the fucking levels. So just use confirmations. But just understand in terms of automation, if we blow through 1, 2, 3, 4 support levels, what I'm telling you is when the SPY retests all 4 of these support levels, the best one to automatically buy puts typically is the highest level. And then you could do the inverse, vice versa of what I just said for calls with the breakout and retest, right? So use that information to print at the speed of fucking light. For there to be some sort of slight break of trend and for the bulls to really show up and take some fucking control, basically, they would need to hold above 546 and they need to break and hold above 549 to not start to drop back down for the bearish trend day. But overall, man, just look for those fucking sell-offs, man. I'm telling you, calls is going to be very fucking difficult. The only level consider for calls tomorrow, 546 for a quick scalp, 542, 539, and 540, 536, and 533. Those are the only levels I would consider for fucking calls. But like I said, if we are staying under the break and retest, the breakdown and retest levels and just forming resistance at the fucking levels, it's going to be overall fucking bearish and you're not going to want to be in calls in that particular situation, man. For there to be a flip of trend, the bulls have to turn 549 into support and then we go to 555. Bulls have turned 555 to support, then we go to 561. It's unlikely to happen tomorrow. It's more likely to happen on Friday. What they're going to try to do is they're going to try to fuck calls and decay the fuck out of calls first, likely in that situation, and then we have that bullish recovery on Friday. So we're looking for potentially big spikes towards the levels to buy puts on tomorrow, short the bounces, breakdown, retest for the bearish trend day, then calls right before the market fucking closes. That's the most likely outcome, but just be aware it might not happen. But if we do have the bearish close, I'm definitely going to be swing trading calls. I mean, if you wanted to do absolutely nothing, you can literally just wait for the market to close. If it closes fucking bearish, just swing trade fucking calls. That is the most high confident, best setup in this entire fucking game plan is literally the swing trade idea, man. It's very, very rare that I swing trade, but when we have these massive moves, this is where you're going to see me swing trading. Like I said, if we have a bearish close tomorrow where SPY doesn't recover that much and the daily candlestick is bearish, I'm swing trading fucking calls for Friday expiration. If you want, you can go with 2 strikes, go with one that's next Friday expiration, give yourself more time if you like. But overall, man, that's what you need to understand. Like I said, we're due for a 10-point recovery. We already recovered 7 points, but the recovery could be a normal trading hours as well. That's where it gets a little bit complicated. If the recovery is going to be towards a normal trading hours level, towards a higher level, like 546 to 549, or is it going to be at a lower level towards 542 to 539? But regardless what it is, we should be able to absolutely crush it on calls when the oversold zone is hit, especially if we swing trade those calls on a bearish trend day. And it's just best in terms of calls to just literally swing trade it at an oversold level right before the market closes. If it's closing bearish, just swing trade right before the close. That's your best situation on that, right? So that's the game plans. Now, in terms of Team Roar, let me break down the trades that we ended up making today, man. So take a look, man. These are the trades that we ended up making. You can see right here. So in terms of G-Roar, he absolutely crushed it. I think he went like 9 for 11 on the fucking day. It was fucking insane, man. Look at this. First trade on the day was an L. We ended up doing Tesla puts. It was a loss, right? So we trade cheap, low risk, 0-to-8 options contracts. The most we risk is what we put into the trade. That's our max risk per trade. So we have the entire day to hold these trades, right? If they expire worthless, go to 0, never go green, then it counts as an L. If they go up 15% plus, we set a profit stop, get stopped out for profits, add to winners to increase the wins, set the profit stop to protect the new average cost, move the profit stop up higher to ensure that we don't get back the bulk of our gains. So the first trade was a fucking L. Now, the second fucking trade was a very nice win. At 9:35 a.m., we ended up buying calls. We ended up buying 565 SPY calls for 55 cents, right? We don't even have to put SPY in the fucking alert because everybody knows 565, we're trading fucking SPY. Everybody knows we mainly trade 0-dates on SPY before 3:30 p.m. Market open 9:30 a.m. up until 3:30 p.m. And then after 3:30 p.m., we switch to SP fucking X. So with that being said, 565 calls for 55 cents a contract. And then as you can see, we added. That's what we do. We add to winners. So you go to 565 fucking calls, you're going to see. This is what we do, man. All we do is fucking win. All we do is fucking print. Non-fucking stop, man. Like I said, it was like 9 for fucking 11. Look at this. We got in right here. We got in here at fucking 60, and it went to fucking 108. You could have made nearly 100% return on that. Nearly a 100% return on SPY call options, and we added to the winners. You see how on Tesla it was the loss, and we didn't add to the fucking loss? These contracts were cheaper, lower risk, and they went up a fuck ton, and we added to the fucking winners, right? In terms of that play, setting profit stops on the calls when we are up nearly 30 cents. When we're up nearly 30 cents, like 25 cents, setting the profit stops, moving the profit stop up higher, bring your profit stop up closer. This is a real-time 0-to-8 options train alert system that prints nonstop, selling at the exact short-term peak right here. So we ended up getting out at the exact fucking peak right fucking here. Later on into the day, these contracts ended up going to 380. And by the way, when you're trading SPY, 0-dates, make sure you have a broker that allows you to hold past 3:30, and make sure you have a broker that allows you to hold up until 4:15 p.m. You can literally close out your position with the right brokers to be trading 0-dates up until 4:15 p.m. Look at this. This is during extended hours. You could have sold your contracts right here in the 350s right before the market closes. Look at this move from 100 to 350. You could have traded the 0-dates up until 4:15 p.m. on SPY. On SPX, it ends during normal trading hours. On SPY, it goes up until 4:15 p.m. on the 0-date option contracts, right? So make sure you're using a broker that does not auto sell you past 3:30 p.m. Make sure you're using a broker that allows you to trade SPY 0-date contracts past 4 p.m. up until 4:15 p.m. because sometimes we have these big extended hours moves. So that was a massive win where you could have potentially made if you held and left runners on that particular trade. You're in at 50. It went to 400. You could have literally made an 800% profit return on that overall trade, man. In terms of what we made, we added to winners, doubling the position size, and we made 100%. If you left runners, right, because we trade the fucking trend, you could have made twice and gotten in on this trade twice or even multiple times an 800% profit return. The trades we enter are the best fucking entries possible with the biggest percentage returns. We were literally in right here towards the exact lows, and it went from 50 all the way to 400 twice. It went from 50 to 400 back to fucking 50 just like yesterday. This was the same shit that happened yesterday. And then it went back to fucking 400, man. You could have made that same trade twice for 1,000% gains, man. We put you in the best fucking trades possible that are the cheapest, lowest risk with the biggest percentage upside potential. All you have to do is hold the fucking trades, add to winners, set the profit stops, leave fucking runners, sell the runners deep in the money for 1,000% gains, man. That is a massive fucking win, man. So with that being said, man, that's what we do. We give you the best trades possible, and we create the best 0-day options trade alert system. Next trade, 568 SPY calls for 52 cents a contract at 10:02 a.m. You go to 10:02 a.m. This is where we got in. So we bought calls again. We got in right here, 50 cents, right? Now look, we added to the winners. We added to the winners right here. had a nice drop. Dropped 50%. We don't use stop losses. Inside of Team Roar, we do not use stop losses. Make sure you hold the plays till zero. The worst thing you could do is use a stop loss. The second worst thing you could do is sell for a loss. Do not do that. Hold the trades till fucking zero. 70% of the time, we are down 90% on a trade. It comes back to life and goes in the fucking money. It is always statistically worth it trading alongside us to hold the trades. Never fucking sell for a loss. Never use a fucking stop loss. The absolute worst thing you could fucking do is use a fucking stop loss. With that being said, in terms of this overall fucking trade, as you can see, it dropped 50% and it came back to life and it went to 200 cents a contract. And it did that twice. So on this overall trade, you could have made a 300% profit return on 568 calls and we were adding to the trade. That is another massive win. That is back-to-back massive fucking wins on calls. Now the winning doesn't stop there because in terms of Team Roar, we take advantage of every opportunity to buy with the overall trend and we will take advantage of every strike. All these different strikes counts as multiple fucking wins. This is another strike. 566 calls at 10:12 a.m. and we're holding the other trade previously, right? So with that being said, you go to 566 calls. This is where we got in. This one, we got in at the exact fucking lows. What did I tell you? When we trade the trend and a trade drops over 50%, it comes back to life later into the day. Instead of adding into this loser that was down 50%, that went up 300%, we hold the loser, and when the loser goes green, we either add to it, set the profit stops, get stopped out for profits. As we're down 50%, what we do is we buy a second strike. This was the second strike. Instead of adding to a loser, we buy another strike at the exact fucking lows. You see the improvement? I tell you this all the time. When we buy a strike, and then if it goes down 50% plus, 70% of the time it comes back to life, hold the trade. And if we're down 50% on a play and we buy the same side, if it's calls and the first call strike was down 50% and we're still holding, right? If we buy a second strike on the same side of the trend that we went with, we're likely getting in towards the exact lows. It's a bigger improvement, and it's likely not going to drop 50%. We are rarely ever wrong about the overall trend, right? Which is another reason why we hold the plays, because we trade the trend. These trades can drop 50% within minutes. It doesn't hurt us because the most we put in is our max risk per trade. The most we put in is what we're willing to lose. The most you can lose is what you put into the naked 0-to-8 options. The most we put in is your max risk per trade, your R multiple. It could be a couple percent of your account. 5% max if you're a degenerate, high risk. 10%. If you go above that, there's just no fucking hope for you. You're going to blow up your account in time. With that being said, exact fucking lows. Exact fucking lows. We are in calls right here at 60 cents, right? This is why we get fucking ecstatic when a trade drops 50%. Because if we entered a trade and it's down 50%, 70% of the time it's going to go green, which means we're going to win 7 out of 10 times the trade drops 50, 60, 70, and 90%. And we're fucking ecstatic because we're going to win the vast majority of the time holding the trade. But we're even more ecstatic because it's an opportunity to have 2 wins. We can buy another strike, have a second win, more wins, more gains, and also it's towards the exact fucking lows, which is a bigger percentage fucking gain. So we're fucking happy when we're down 50% on a play because it's an extra win, and the extra win tends to be at the exact fucking lows, and you could size bigger if you want on that second strike. You could size on a little bit bigger. If you have a very small account, if you want, you could do this. You can just wait for us to enter a play that's down 50%. And then if we call another strike, go with that one. If you have a small account, I mean, the people with medium to large accounts, they take the vast majority of the trades because they can afford being down 50% on one play. It's not a big deal. If you can't afford to risk 50 cents, $50 a contract, don't fucking trade. You can literally trade one contract and flip it to 200, 300%, the speed of fucking light, compound the account with small account. But some people's accounts are so small and they might think of, well, how can I get an edge with the system? I told you one way you could possibly create an edge is you can wait for us to have a trade that's down 50%. And then if you see us enter another strike on the same side of that trade, then just go with that one. You're going to make much bigger gains, right? But the people with large accounts, they'll be sizing accordingly on both and just fucking print. But if you have a small account and you just want to enter the best trade possible, I told you one of the ways to do it, because sometimes on that first trade, it's not going to be timed perfectly. But on that second trade, it's much more likely to be timed perfectly. But the people with money, they'll take fucking both because they don't want to risk losing out if it was the first trade. Plus, they know the first trade's going to print. So they look at it as, dude, it's an extra fucking win, more fucking gains, and I'll just size him bigger on the second one, right? I'm just explaining to you how to potentially think to trade with us and create an edge on our system. So that's another massive phenomenal win, man. Do you understand how many trades on calls that was today that went up 1,000 fucking %? Who told you in terms of the game plan to just be buying calls above 561? I told you that how many fucking times? And all we were fucking doing is just buying fucking calls 25 cents to fucking 300, fucking 40 cents to fucking 400. That is 3 trades on calls in a row that all went up 1,000% plus twice from our entry. 1,000% plus 3 fucking trades. You could have made over fucking 5,500% profit return, leaving runners on all those fucking trades, man. Who is putting you in the most lucrative trades, capitalizing on every single strike possible on the overall trend? Do you understand we are the fucking best? Who's fucking showing you this, man? Do you see how many fucking massive potential fucking wins you could have had today with us trading fucking calls? We trade the fucking game plans. They print non-fucking stop. Now look, 11:13 a.m. puts, 555 SPY puts for 67 cents a contract, right? So in terms of the situation, you go to 567 puts. They quickly went to 80 cents and then they sold off, right? So in terms of this trade, it was hard in a sense to make gains, but if you got in right away and have your option chains open and ready like you should with the market orders ready to print at the speed of fucking light with push notifications turned on these channels, you could have potentially had a small win. It went from 67 to 80. When we're up 15% plus, we set profit stops. It could have been profit stopped out for a small green. If you go to 11:13 a.m. on 555 puts, you're going to see it had a small increase from the time we got in, right? This is when we got in right here towards the low of this 1 minute candle. The next 3 minutes were bullish. Right here, it went to 78. Right here, it went to 82. Could have been profit stopped out for a very small win. That's why we tell you to set profit stops, because sometimes it's going to be a smaller win and then it's just going to sell the fuck off. And we're not going to go green to red in that situations. Other times, it's just going to go straight up. We'll move the profit stop up higher and then eventually have a big pullback, and we don't stomach the whole of that pullback because we move the profit stop up higher. Once our profit stop hits, we get stopped out no matter how big and fast it quickly fucking drops, right? So sometimes it will just keep on going straight up, massive wins for multiple 100%. Sometimes it'll be a smaller win above 15% and we get profit stopped out. It's different each time. But there's many trades with the highest probabilities to maximize the wins, and we add to winners to increase the wins, and we set the profit stops to protect the wins and to protect the new extra 1 to 2 R multiples that we're putting into the fucking trades. Now, next trade. 567 SPY calls for 76 cents a contract. If you go to 11:22 a.m., 567 SPY calls, you're going to see right here, 567 SPY calls right here at 11:22 a.m. This is where we ended up getting in. We got in right here. As soon as we got in, it was at 80 cents. Within minutes, it went to 120 cents. You could have made 80% plus on that at the speed of light. Later on in the day, it went to 240 cents twice, and it went back to our initial entry. How many opportunities on calls could you have made multiple 100% to 1,000% plus? That is over 8. That is now 8 in a row. Four different trades in a sense, happened twice on each fucking trade, right? All we do is fucking win. All we do is print. Do you see how many fucking massive fucking wins that is on fucking calls, man? It's fucking unfucking real. This is why I tell you the win rate does not fucking matter. So we had all those massive fucking wins in a row, the biggest percentage gains. Then right here, we had an L. A loss doesn't matter when you're trading 0-8 options. We have the highest win rate in the game, and 0-8 options give you the strongest foundations. If you have 2 100% losses and then you have 1 200% plus win, you're going to be profitable with a 33% win rate. If you have 1,000% win, and we have 1,000% win at the bare minimum every single week, and you have 9 100% losses, you're going to be up 100% with a 10% win rate. Therefore, losing is a personal fucking choice with a low win rate, but we have the highest win rate because we're the best in the absolute fucking game. We're making the most amount of trades with the highest probabilities of winning fucking big, and we are rarely fucking losing doing this, man. And one of the reasons why we're rarely fucking losing is because I told you, we trade the trend. The entry and the timing does not fucking matter. We trade the trend. We go far the money, cheap, low risk, but not far enough to where it doesn't have the probabilities of going deep in the money later on throughout the day if you hold the trade. We have the entire day to hold the trade, even if it goes down 99% plus, because we use the right brokers who don't close out our positions past 3:30 p.m. like Robin has done to several people, but also because the most we put into the trade is our max risk per trade. Traders who use stop losses, when they get stopped out, what do they lose? They lose what we lose, our max risk per trade. With us, there's no stop loss. Our max risk per trade is the entire position of the trade. The most we lose is what we put into the options, our max risk per trade. We can hold the trades without breaking a sweat because before we enter, we know what our max risk per trade is. We know the exact amount that we can lose. The most we can lose is what we put into the trade. And in terms of that trade, The most we're putting in is our max risk per trade. Now, when we are in a winner, we do increase the winnings. We do add 1 to 2 R multiples to double to triple the gains, but we set a profit stop to ensure that we get stopped out for profits if there is a pullback towards our new average cost, right? So 554 SPY puts, we finally had an L. So in terms of that situation, that's 2 L's on the day. Several fucking wins on calls that went up multiple 100% to 1,000% plus. Right here, this is another one, 12:15 p.m. Like I said, we capture every fucking strike. 569 SPY calls for 59 cents a contract. If you go to 12:15 p.m. on 569 calls, you're going to see right here, this is where we ended up getting in, right here. So you go to 12:15 p.m., right? We're going to go to 12:15 p.m. I'm going to break this down here for you. We go to 12:15 p.m. You're going to see this is where we got in. 12:15 p.m. We got in right here, 60-cent mark, right? Now you're going to see adding. We're adding to the winners at 12:33 p.m. This is where we're adding. We're adding right here to the winners. It has a small move up. We're adding to the winner, right? And then you're going to see right here, adding to the winners, adding to the winners, adding, doubling the position size, tripling the positions right here, adding 100 more at 62 cents, 12:44 p.m., right? So adding. We added here. We added here on this pullback as well. We added here on this rip. Now, look at the fucking trade, man. It went up at the speed of fucking light to 160, and we tripled that position size. And there wasn't a big pullback up until 100. So you either would have been profit stopped out right around here towards 86, or you would have been profit stopped out right around here towards 130. And you leave runners obviously in that situation. Fucking phenomenal, man. Look at the fucking play. It printed like fucking crazy. Entry, add, sold right here in the 100-cent plus range. Fucking amazing. And see how we're adding to the winners, and you see how when we have a loser, there's no fucking adding. Why? Because we don't add to losers. Like I said, if we're down big on a play and we still believe it's going to work in our favor, we'll buy a second strike that's aligned with the side of that trade, or we'll just take a different strike if we don't believe in that first trade, aligned with the opposite side with a different strike, right? We print and we win non-fucking stop. It is unlimited fucking winning, unlimited fucking printing. Look at the fucking results, man. Fucking on that one fucking trade alone, $9,100 profit, man. Literally written out, adding 100 more contracts at 62 cents a contract, man. So after going 6 for 8, there was a coffee break. In terms of after the coffee break, we ended up having 557 SPY puts for 54 cents a contract. You go to 557 puts right here for 54 cents a contract, and this was alerted, as you can see, at 1:58 p.m., right? So this is where we got in on the overall trade right here at 1:58 p.m. towards the exact lows. As you can see, it quickly went to 90 cents. You would have been profit stopped out right here as it dropped to the 80-cent range for a phenomenal fucking win, man. And look, adding to the winners, adding to the winners, adding to the winners. The rich get rich by adding to the wins and setting profit stops to protect their new average cost so they don't go green to red when they're doubling to tripling their position size to doubling to triple their gains. When they are down on a play, what they do is, I'm explaining to you, when you're down 50, 60, 70, and 90%, they hold the trade because it comes back to life 70% of the time because we trade the trend. Instead of adding to the loser and putting yourself in a situation where you're exposed to more risk and you're already down, how the fuck are you going to set a profit stop if you're down on the trade? You can set a stop loss and fucking lose more money. We don't do that. What we do is we buy a second strike. The second strike tends to be a hell of a lot better than the first trade that dropped 50% plus. We're the absolute fucking best, man. Do you see how many wins is doing this? Let's be real and let's be honest. Who do you know is showing you this every single fucking day? Who gives you the best game plan? And if you look at every single fucking game plan I gave you this week, everything I fucking said happened to an exact fucking T. You should be winning and printing and becoming self-sufficient, non-fucking stop getting results with the game plans, with the levels, with the curriculum. But who the fuck do you know is winning this much, this consistent, this big, going green every single fucking day at the speed of fucking light? Do you understand? We're the best zero-day option traders on the fucking planet. There's not another fucking group, another fucking trader, another fucking person showing you what it is that I'm showing you and doing it the way that we fucking doing it with a real zero-day options trade alert system, man. It's the most secure private network on the fucking planet, man. Look at the fucking results. Look, another fucking win. How many fucking wins do you want, man? This is what we like. We like unlimited fucking winning, unlimited fucking printing, in the cheapest, lowest risk way possible. It's the biggest percentage returns in the market with the cheapest, lowest barriers, lower barrier, lowest risk, right? So 567 SPY calls for 63 cents a contract at 3:32 p.m. Take a look. you go to 563 calls, right? So in terms of this overall, you go to 567 calls right here. So if you take a look at 567 calls, this is where we ended up getting in at 3:33 p.m. I'm going to walk you through this. This is where we got in. As soon as we got in, it went straight up to 120 cents. Another 100% gain. Let's be real and honest, man. Who do you know is winning this much, this consistent, this big every single fucking day, man? Do you understand? Everything we do fucking works. Everything we do fucking prints. The title, last night's title of the fucking video, what did it say? Buy calls above 561. Look at the fucking floor on SPY, man. The fucking floor on SPY, 561. Like, man, all we do is fucking win. All we do is fucking print. So that's what we ended up doing today. I mean, 569, this was the SPX YOLO. You go to 569 SPX calls. We got in right here at 3:45 p.m. We do SPX after 3:30 p.m. So if you go to 569 SPX, you're going to see this consolidation was a small win where you would have been profit stopped out. We entered towards the low of this 1 minute candle, right? And it went from 90 cents to 135. And then it quickly went from 140. Then it sold off. So just a quick trade. Could have been a small win or could have been a small loss in that particular situation. Now, final trade was an L. It was just a YOLO, literally at 350. The final SPX YOLOs were just complete degenerate from 3:58 p.m. Just a YOLO on SPX didn't work out, right? Everybody knows in terms of our real-time zero-date options trading alert system that, to be green enough, you need one big win. Could be like 100% to start your day. We have the best morning trades, best power hour trades, best trades in general, right? Best zero-date options trading alert system, biggest percentage gains, cheapest, lowest risk. I mean, look at all the 1,000% plus potential profit returns you could add today multiple times on all the fucking strikes we had on calls. But the point is, man, if you are green enough to stop trading, which is like 100% win or two smaller wins in a row, and we were obviously green enough to stop trading. If you choose to keep on trading, which you don't have to, if you choose to keep risking money to make more, risk your gains to make more, which you don't have to, then the most you risk is 25 to 50% of your gains. If you give back those gains, then you have to force yourself to stop trading because we're not going to go green to red on the day. Team Roar is the largest zero-date options trading alert system company on the fucking planet. You need to understand this is not just buy and sell alerts. This is a strategic alert system that has profit stops, where to set the profit stops, where to enter the trade, where to set the profit stops, where to move the profit stops. Don't use stop losses, max risk per trade into the position, double to triple your gains by adding to the winners and setting the profit stops, getting profit stopped out. Look, man, we are ranking under the top 100 companies nation fucking wide on WAP.com. There is tens of thousands of companies on WAP.com. There is massive companies on WAP.com. Some of them are making over 500K to millions a fucking month on WAP.com. One company alone. Our group is ranking in the top 100s out of every group on WAP. Every single day, man. All we do is fucking print. All we do is fucking win. Non-fucking stop. It is unlimited fucking winning, unlimited fucking printing, man. Big shout out to G-Roar for absolutely crushing it, man. I'm telling you, we have the most secured private organization on the fucking planet. All we do is fucking win, and all we do is fucking print. Non-fucking stop, man. Like, look at the fucking results, man. Non-stop winning, non-stop fucking printing, unlimited fucking winning. So, in terms of my trades, man, I'm going to quickly go over this. Now, I will say, in terms of today, man, you guys really need to take this seriously. The worst thing you could do, so first of all, never use a stop loss. Let's get that out of the way. Never use a stop loss. But I'm telling you, the worst thing you can do is sell for a loss. If you're down 50, 60, 70, 80, 90%, worst thing you can do, sell for a loss, right? So in terms of today, it wasn't my best overall day in trading. One of the problems I was having was my timing was off. But even though my timing was off, I was right about the overall trend. And if I would have just held the fucking trades, I would have been fine. I think one of the reasons why I just didn't hold is because I was sized in extremely heavy. If you're not willing to hold the trades, it means you're either sized in too heavy or you just have no faith in the play. But like I said, man, even if the trade's down 90%, just have the fucking faith. Don't sell for a loss. Never use a stop loss, man. Because in terms of today, man, it wasn't my best overall day. G-Roar absolutely fucking crushed it. The trades I made were phenomenal, but the exits weren't. They were just like break even, small wins, and then some, 30 to 40% L's on two trades. So it wasn't a big red day or anything like that, but it was just not my personal day, man. And the reason why that is only because I sold for a loss. So guys, I'm gonna make this very clear, man. I'm like done. Every once in a while, I'll sell for a loss. G-Roar, he'll never sell for a loss. Every once in a while, I'll sell for a loss. But look, man, if you just can't, if you just have to sell for a loss, don't do it. Just size in small and just have faith. Even if you don't have any fucking faith, just have faith and fucking believe, man. Because I'm telling you, 70% of the time anyways, even when you have the biggest doubts that it's not going to come back to life, this is what, sometimes I try to be right. I know at least 70% of the time when I'm down 50 to 90% on play, it's going to come back to life. But sometimes I'll sell for a loss because I think I'm going to be right, because it's not going to happen every single time. But statistically, you shouldn't even try to be right. You should just go with the statistics that 7 out of 10 times we're going to be fucking right. So just hold, instead of trying to be right about the 3 times you're going to be wrong, trying to preserve some capital, just size in a little bit less in a fucking sense, right? But I'm going to show you, man. The entries were fucking phenomenal. This was my first trade on the day. I mean, not the entries. The entries weren't phenomenal, but the overall trades, if you held them, were phenomenal. So 565 calls, 178 cents for 1:55 p.m. Another thing that threw me off was, since the moves have been so fucking massive this week, the contracts have been very fucking high, and that's been throwing me off a little bit in terms of like how I would normally size and hold the trades. Just paying for such high contracts, and I'm going far out, but not as far as G-Roar as well. So the change in prices have thrown me off a little bit, because I'm not going further out like G-Roar has been doing, and they're much higher price contracts. That's one thing that threw me off a little bit in a sense as well. But in terms of the SPY, man, I got in 565 calls at 1:55 p.m. You go to 565 calls at 1:55 p.m. So look, man, this is where I got in. I got in right here. As you can see at 1:55 p.m. I'm going to break this down here for you. So if you go to 1:55 p.m., you're going to see this is where I ended up getting in. So I got in right here. This is where I got in. As soon as I got in, it went from 150 all the way down to 70 cents. So the trade dropped 50%. And then shortly enough, after it dropped 50%, it came back to life. It went to 210, which is a win if you would have held the trade, set a profit stop. Many traders in our group held, and they chose to not sell like I did, because everyone knows we don't fucking sell, and you shouldn't fucking sell. So like I said, man, I'm just done with that particular situation. I'm just going to accept it, man. Main reason I sold was I lost some faith in a trade, and I'm well aware that, 3 out of 10 times we're down 70%. It's not going to work out. So I was just trying to be right, but statistically it's going to work 7 out of 10 times. So instead of trying to be right, just go with the odds, go with the statistics, and just understand out of one of those 7 trades, it's going to be like a 300% to 500% win anyways. But if you sell for a fucking L, you're not going to be able to fucking win, dude. So just fuck trying to be right in a situation where it doesn't make sense in terms of the numbers to be fucking right. It doesn't make sense for me to try to be right if 7 out of times it's going to fucking hit. Just hold the fucking wins instead of trying to be right out of the 3 times it's not going to come back to life, right? I just try to be the best in every fucking realm. That's one of the reasons. But also, I did lose some faith in the overall situation, man. Like I said, even if you're losing faith in the trade, just fucking hold it, man. You can always buy another strike. You can always add to a fucking win. Just hold it. Let it go to fucking zero if anything. If you look at our fucking trades, man, let's be real. Let's be real and honest. Every trade we make, out of all the fucking trades we make, whether they fucking drop 90% or where they go the fuck up, do they go up 15% plus to set the profit stop at the bare minimum? Yes. But literally, like, every single fucking trade, even if it drops like 90% of the time, like, vast majority of every single fucking trade we make, even if it goes down 90%, it goes green and up 15% for you to set a profit stop. So it's like, dude, just hold the fucking trades. One of those trades that were down 90% could go up 1,000 fucking percent, and the second strike can go up a fuck ton more of that. It's like, just hold the fucking trades. Do not sell for a loss. You need to size in smaller. If you are down 99% and it's hurting you, and you're well aware some days we're making 8 to 15 trades, size in smaller. Most you put into the trade is like 5% of your account. 2 to 3% is a fucking lot. If you put in 5% of your account and the trade goes up 100%, your account is up 5% and you compound it. That is a fuck ton with cheap, low risk, especially on like 2%, you're not risking much. But we're having trades every single week where they go up 1,000%. If you put fucking 5% in a trade and you make 1,000% gain, you just made a 50% profit return risking 5% of your account. It's like, dude, don't sell for a loss. Never use a fucking stop loss. Again, this is for our style of trading. We trade different. We are completely different than any other fucking trading group out there, okay? What I'm telling you applies to our style and our system of trading. It does not apply to how you're fucking trading. Most people, they buy something that's expensive. They buy an asset class that doesn't give them the biggest percentage gains, something that's expensive. They size in fucking huge. They use a tight stop loss and they sell for small wins, and they never win big because they're either stopped out or they're sized in too big to hold the fucking trade, or their stop loss is just too close to the overall trade where they're just not able to fucking hold it. It's like, dude, we don't do that. Cheap, low risk, biggest percentage wins, no stop losses, add to wins, set fucking profit stops. We do the complete opposite of everyone else you follow. And I'm telling you, if you look at every fucking trade that we make, no matter what the fuck trade does, no matter what the fuck the trade does, it goes up 15% at the bare fucking minimum. Whether if it goes up 15% right the fuck away, or if it drops 90% and then 7 out of times goes back up to 15% plus, it's like literally every single fucking trade is winning and fucking printing. Do not sell for a fucking loss. If you're in Team fucking Roar, do not sell for a fucking loss. Hold till fucking zero until expiration. If you're green, you're up 15%, set the fucking profit stops. That is the fucking rulebook, man. Stick to the fucking rulebook, and you're going to see fucking why. Look at what this fucking cost me on the fucking day, man. So, 565 calls, I already explained to you what happened, right? And then in terms of that trade, I ended up cutting it. It was not a good overall trade. That was the worst trade that I made on the day. But if I would have just fucking held, it would have printed like fucking crazy. Now, I ended up buying a strike. I kept on buying more and more strikes as it kept dropping because I was playing for a strong bullish close. The same pattern that was occurring yesterday. And I told you that the market was going to try to have a strong bullish closing trend day as long as we break above 561 and already hit 567 and drop from the fucking gap. It made perfect sense to play calls for a strong bullish close just like yesterday. And I'm going to go over the patterns. 564 calls, 170 cents at 2:06 p.m., right? You go to 567 calls, 2:07 p.m., you're going to see the trades just keep on getting better as I keep on fucking trading. But in terms of this trade, if you go to, 564 calls, 2:06 p.m., I'm going to go to 564 calls, 2:06 p.m. So in terms of this overall trade, right, you're going to see right here, this is where I ended up getting in. I got in right here, and then as you can see, it quickly dropped to the 100-cent range. I averaged my cost down, which is something we normally don't do, but I was expecting a very strong bullish close, so I decided to do it instead of just buying another strike right away. 117 cents. It wasn't too far out enough, and I liked the price, and I thought it was going to close deep in the money, so it made sense to just add to the fucking L and average my cost out towards the middle there, right, towards the 150 average. So that trade, with my average from 150 up to 300 and then to 600 during the after hours, right? Could have made multiple 100% profit returns, especially if you held towards after hours session, right? So like I said, we had plenty of people trade, most people, a lot of them held the trades. They didn't sell when I sell. They're not going to, try to copy everything I do. This is a system at the end of the day that you can use to your own advantage. Now, 563 calls, bought 563 calls at 2:33 p.m. And keep in mind, I was holding all my strikes as I was buying these new ones. I was holding all of the other strikes, right? Every single strike went in the money and every single strike fucking printed. All you had to do was hold the trades. Remember what I'm telling you, man. Worst thing you could do, use a stop loss. Don't do it. Another worst thing you could do, sell for loss. Don't fucking do it. 563 calls, 168 cents, 2:33 p.m. So you get a 563 calls, 168 cents, 2:33 p.m. You're going to see right here. This is where I ended up getting in. In terms of this one, I got in perfectly. Third time's the charm. I got in right here, 167, and it went to 250 cents, right? So you should have had your profit stop set at 1500%, at 15% plus. You don't have to try to copy and do everything I do. Sometimes, I'll just try to let it ride, be greedy in a sense. I mean, I was greedy on this trade. I was playing for such a strong bullish close. I just wanted to hold it, but it ended up going right back down to my entry. And then shortly enough, it pushed higher like I expected it to do within time and went to 400. That was a phenomenal trade where I timed that perfectly. That could have been a massive win for you. And then the final one under that was 562. And see, this is where I was adding. I was adding the 565. I was adding to 564. I kept on adding to these losers as well, and they all fucking recovered and went deep in the fucking money, man. I was even adding to 563 calls as it started to go up. And then 562. This was the final one, man. Look at that. That is 4 fucking strikes. 4 fucking trades, all went deep in the money, all massive wins. And as I kept on trading, the trades kept on getting better, as they should. As you have more experience trading on the day, it shouldn't be over trading. You should be getting fucking better if you're trading more into the day, not over fucking trading. If you're trading more into the day and the trades aren't getting better, then you're over trading. That's the quickest fucking tell. My trades were getting better as I kept on fucking trading. The timing was off at first. As I was getting down towards the end, the timing was a lot better. So 562 calls, 3:02 p.m. You go to 562 calls right here at 3:02 p.m. This is where I ended up getting in, again, towards the exact lows, just like 563 calls. These went from 200 all the way to fucking 400. So if you use the profit stops on those last 2 trades, you should have been fucking green. In terms of the other ones, it was just selling for break even and 30 to 40% losses. But overall, man, as a whole, we fucking crushed it, man. Like, we fucking crushed it, man. This was a phenomenal fucking day. And the main lesson in terms of for me to be learned is, like I said, if you have no fucking faith in the play, hold the trade, never sell for a loss, and don't try to be right 3 out of the 10 times we're going to be wrong when a trade is down 70%. Because that's what I was trying to do, and that did cost me some fucking money, man. So don't fucking do that. Just let it go to worthless and accept the fact that you're going to be wrong on some trades sometimes. Everybody knows if you hold our fucking trades and you set the profit stops, we are rarely every fucking wrong. We're rarely every fucking wrong, man. So trying to be fucking right when you're rarely going to be wrong, it's just don't fucking do it, man. Hold the fucking trades. The odds are within our favor. The statistics are in our favor. You could be selling that trade for an L. It can go up multiple 100% profit returns. And it's only not going to work out like 3 out of every 10 fucking times. Like I said, when we're down 50 to 90%, it comes back to life 7 out of 10 times. So don't try to be right when it's going to be wrong 3 out of 10 times. Just hold the fucking trades. Let them expire worthless and go to zero. If it doesn't go up 15%, it's completely fine. Max risk per trade is what we put into the contracts, right? So everything we're putting in is our max risk per trade. We're not taking these massive sizes and using tight stop losses. We're taking smaller sizes, and the way we make our gains is by making more trades, higher probabilities. More trades is more wins, higher probabilities to win bigger, big percentage gains, adding to winners, increasing the gains, double to triple, and setting the profit stops. That's how you get rich doing this. I'm telling you, this is how you get rich fucking trading 0-day options. Listen to what the fuck I'm saying, because there is no better way to trade 0-day options. We've experimented everything. I'm being very honest with you. This is the best 0-day options trading system on the fucking planet. Max risk per trade is what you put into the trade. The most you can lose is what you put into the trade, your max risk per trade. Couple percent of your account, 5% max, 10% if you're going the degenerate path. How do you win more? By taking smaller position sizes, bigger percentage gains, trading more. And like I said, we're experienced. So the more we trade on the day, the better the trades get as the day goes, right? And like I said, just no stop losses. Let the trades expire worthless go to zero. 70% of the time, the trades that are down 50 to 90% are going to come back to life and go fucking green. Set the profit stops when you're up, add to winners when you're up, and it increases the gains double to fucking triple, right? So this is what you got to do, man. I'm explaining to you how to make super fucking crazy fucking gains. Think about it. If you're making 10 fucking trades a day and they're going up multiple 100% profit returns each, you're going to be making a fuck ton. If you're putting in 2% per trade and it goes up 100%, your account's up fucking 2%. If you're doing that 10 times a day, your account's up 20 fucking percent. You're only risking 2% for fucking trade. It's like, dude, we're adding the winners to double to triple the gains, meaning those 2% wins are now 4 to 6% fucking wins on your account because they're going up 100% plus. Every 100% they go up. That's another 2 to 4 to 6%. You compound it, you get rich at the speed of fucking light, man. On days like this is where you get shit fucking rich, man. And think about what that adds up to on a fucking week or month of fucking consistency. That's why we say, man, if you join our fucking group, do not abuse our system. Do not abuse the system, man. The worst thing you can do with us is size big. Never size fucking big. If you want to size big, the only way to do it is to quickly add to a winner when we're up in between 5 to 20%, double to triple your position size, which means, technically you have 2 to 3 R multiples in the trade, but you're really only risking 1. Well, not really risking any in a sense because you have your profit stop set and you get stopped out for fucking profits regardless, right? But you still have 3 R multiples in that fucking trade, but the profit stop is going to save you from going green to red, right? That's the only way to increase your size. If you're down 90% on a play and you want to increase size, don't add to a loser, buy a second strike. That's what we do, and it works out fucking phenomenal, man. We trade the trend, and if you hold the trades, they come back to life. It's fucking genius, man. We're happy when we're down 90% on a play because it comes back to life 70% of the time, which means we're now in a situation where we're going to win twice because we enter a new strike, and the new strike is at the exact fucking lows, timed perfectly, and an opportunity to make 300,000%. It's like, dude, we figured out a way with Follow the Money 0 dates where when we're down 90% on a play, we're fucking ecstatic, right? Because it's an extra fucking win 7 out of 10 times, and it's likely going to be timed perfectly. It's very hard to time that first trade perfectly, but we do extremely well at that. But that second fucking strike, when we're down 90%, oh my God, it's so much easier to time that one fucking perfectly, man. Which is why I'm giving you the fucking keys to use our systems to your fucking advantage, man. I'm literally telling you what the fuck to do. It's so fucking simple, man. So, if you have no fucking faith in the trade, hold it. Never use a stop loss. Most you put in is your max risk per trade. If you're experiencing 100% losses, you need, and it's hurting you, you can't stomach that, then you need to size down. You need to size down, man. With us, all you need is one fucking contract to get started. You can turn a small account, $500 into a couple thousand, thousands to fucking tens of thousands to 100,000. All you need to get started is one contract. If you can't afford to risk 50 cents multiplied by 100, $50 a fucking trade, then don't fucking trade. I showed you the prices we pay for the contracts. I showed you how much they're going up. We win and we print non-fucking stop at the speed of fucking light. If you want to join, it's the first link down below in the description. In terms of the overall day, man, if you take a look at SPY here, This was the game plan that I gave you, man. What was the game plan? I told you. If we go under 560, we're going to drop to 557. So we went under 560. I said if we go under 560, you can do a quick scalp on puts. There was a clear resistance at the previous closing price, 561. There was clear lower highs with a red, green, red bearish pattern. For those of you who trade futures, for those of you who trade extended hours, you're doing fucking puts into this, and you're selling once the 30-minute chart flips green right here towards 555. No reason to be selling here because all the 30-minute candlesticks are red, right? So you sell right here. You're in right here, red, green, red, lower highs. You're selling right here when this closes green. In terms of calls, what was the game plan for calls? 557 break and retest. Remember the break and retest level with the 30-minute candlestick strategy I taught you? This was the 30-minute candlestick right here that we spoke about. If you go, you're going to see right here. This was the candlestick that we talked about. This 557 to 558 range. When SPY drops back to this zone, it's likely going to bounce first and spike. And then if we go above 561, a strong bullish closing trend day, right? So we have a green, red, green, which is a bullish pattern. And this 30-minute candlestick is closing on that green, red, green bullish pattern right fucking here at 558.70 above the zone, which is bullish. Buy the fucking calls, and then it explodes to 561. Look, we have a higher floor at the previous closing price, which is bullish above 561. Buy the fucking calls if we go above 561. We have a green, red, green, higher floor, bullish pattern that has been working at every single fucking level I give you. Green, red, green, slightly above the level. Buy the fucking calls, ride it up. If we go above 561, green, red, green, higher floor, higher floor, higher floor. Previous closing prices is support for 2 fucking hours. We're above 561 for 2 hours with higher support with a green, red, green bullish pattern. Buy the fucking calls. It goes from 564 to 567. How the fuck could anyone be fucking red if you used my fucking game plan, which worked to a fucking T, and the curriculum was there twice? Green, red, green, at the 557 level was there to buy calls. Green, red, green, break and retest at my 561 level was there to buy calls. Right here, you have a sell-off, a bullish fucking doji, and then this is considered a bearish doji, but since it's at support and a break and retest level, it's bullish. 561 bottoms again to buy calls, and it fucking explodes to 570. And you can hold the SPY trades up until 3:15 p.m. if you're using a real fucking broker, a 0-day broker that allows you to trade fucking 0 dates in the right way, like fucking Thinkorswim. Do not fucking use Robinhood on 0 dates. They're auto selling people past 3:30 p.m. on fucking SPY, right? You need to be able to hold SPY up until 4:15 p.m. Another thing with 0 dates is the more time you have to hold, the better. Sometimes there's crazy moves during extended hours, or if your trade's dead, it can come back to life within those last 15 fucking minutes in a sense, right? If it goes in the money in the sense, right? So with that being said, man, everyone should be fucking green. The game plans worked to a precise fucking T. It was so fucking simple. Break and retest, green, red, green, buy calls on the opening of this 30-minute candle, right? Stock market's going to be a bullish trend day if we go above 561, green, red, green, consolidation for 2 hours, green, red, green, buy the fucking calls, right up, set the profit stops. That's 2 massive wins you could have made right fucking there, man. The levels worked, the game plan worked to an exact fucking T. Now, take a look at this pattern, man. I'm going to explain to you the reasoning on why I was buying those calls into the close, playing for that strong bullish close. Look at this pattern, man. You see, I explained to people exactly why I'm in the trades. Take a look at this, man. So this is when I was buying all those fucking strikes on calls. Look, April 1st compared to today, right? When we were trading April 2nd, that's why the next 30-minute candle is going to open up bullish. I'm adding, and the calls are likely going to be the exact bottom in that situation compared to the overall pattern. So look at this pattern. This is April 1st. There's a red candle facing to the upside. Then you have 3 green candles slanted to the right. Then you have 2 red candles slanted to this left side. Look at this pattern, right? Next 30-minute candle is super bullish, and then you have more bullish breakouts above previous resistance. This is fucking April 2nd. Red pin, 3 bullish, two red to the right side, which is why I said if the next 30 minutes is holding and it's starting to go green, I am buying and holding fucking calls for a massive, strong, bullish fucking close. Look at this pattern right here. This is it right here. I'm going to show you. This is exactly what I called out in real time. Red bearish pin, 3 green facing to the right side, 2 red slanted to the left side. And then what happens after that double red? Triple green. You see that? So look at this pattern right fucking here. That's the pattern, right? It starts literally right fucking here. This is where it starts. This is where it ends. Look at this. And this is April 1st. Now look at April 2nd. This is why I was playing for a strong bullish close. Take a look. As you can see, you have the red pin right here. You have 3 green slanted to the right side, 2 red slanted to the downside. what was the game plan? To buy calls above 561? As long as we're holding above 561, we are not going to be buying put options on the fucking SPY. And SPY was just at 567, and now it's at 561. And we had a strong bullish close on April 1st. And if you look at the fucking pattern on April fucking 1st, it was the same fucking pattern that is forming at the level to buy fucking calls. It's like, dude, are you seeing this? How the fuck could anybody be read with the history repeating itself on the 30-minute chart patterns that we were capturing in real fucking time? I capture all this in real fucking time at my fucking game plans. I'm showing the whole fucking shot. What the fuck I'm seeing in real fucking time, man. That's why I was playing for a strong bullish fucking close, man. So like I said, have fucking faith. Hold the fucking trades. Never sell for a fucking loss. And look, I even gave an up. This is the update. The pattern is repeating itself. You see the pattern, right? You see how the 30-minute chart is going green. As this was going green and bottoming like it did last fucking time, right fucking here. Like, dude, just compare to the left. Compare to the fucking right. It's the same fucking shit. And it's aligned with our 561 level. And the SPY was just at 567. It's oversold as fuck. A 6-point fucking drop holding to a 561 with the strongest bullish trend reversal pattern that repeated on April fucking 1st. And the confirmation is fucking there. We were buying and adding to fucking calls heavily, playing for the break above 567, man. History repeated in such a similar fucking cycle where it did end up breaking. Look at that fucking pattern, man. Red pin, 3 green, 2 red, bullish recovery. Break above the previous high. Same fucking pattern right fucking here. It's the same exact fucking pattern, man. Red fucking pin, triple green, double red, bullish breakout, 3 bullish green candles in a row, 3 bullish green candles in a row, at our 561 level, man. Look, losing's a personal fucking choice. Use the curriculum, use the 30-minute chart, use the levels. You're going to print money at the speed of light. For those of you who are serious about trading alongside with us, I can assure you, we are going to end this week very, very strong within the green. This is the best time to trade. The market is at all-time highs in terms of the volatility in the moves, and the 0-date options are going to be on fucking fire, especially these power hour fucking plays, man. Look, do you understand how many trades we answered today? That went up 1,000% twice on calls, over 4. Could have made over 8,000% re-answering each of those trades. Fucking insane, man. Timed very, very fucking perfectly, man. And I gave the curriculum in the chat. I learned in real fucking time, man. I gave people all the fucking confidence in the fucking world to hold that trade. So, like I said, you didn't have to sell for the L, man. You know, some people did, some people held. It is what it fucking is. You got to be self-sufficient in your own sense and always stick to the rulebook. Everybody knows the rulebook is to not fucking sell for an L. So my lesson learned in that situation was never try to be right in a situation where the vast majority of the time you're going to be fucking right 7 out of 10 times on the green side. Don't try to be right on those 3 out of 10 times you're going to be fucking wrong. Like, fuck that. Put the odds in your favor. Put the statistics in your favor. Focus on the big upside potential. Focus on the overall win rate. Now, we fucking crushed it, man. It's the first link down below in the description. If you want to trade alongside us and join us, man, we got people fucking print at the speed of fucking light, non-fucking stop. It is unlimited fucking winning, unlimited fucking printing, man. It's the first link down below in the description if you want to trade alongside with us. You gain access to our secured private organization, our community with multi-millionaires and many traders who been with us for over 2 years now. Like I said, Team Roar is the largest 0-date options trading alert system company. This is not just buy and sell alerts. This is a strategic options trading alert system where we trade 0 dates only on SPY, and then we trade SPX towards power hour because it's the cheapest, lowest risk with the biggest percentage gains from 3:30 p.m. to 4 p.m., right? It's unlimited fucking winning. It's unlimited fucking printing. I explained to you the aspects of the system, and in terms of SPX from 3:30 to 4 p.m., we're literally risking 50 cents to make 300 to 500, sometimes thousands of dollars a fucking contract, which is something that SPY is not going to be able to do for you during the power hour trading session. So SPX is a lot more lucrative, and it's very cheap during 3:30 p.m. to 4 p.m. Before then, we're trading SPY 0 dates. It's the first link down below in the description if you want to get access to our real-time 0-date options trading alert system, if you want to get access to my trades as of now, and if you want to get access to our secured private community and network where you can chat and trade alongside our members, and there's multi-millionaires here as well that do drop analysis and trades every once in a while. So it's the first link down below in the description. If you want to join us and trade alongside with us, I can assure you we are going to absolutely crush it heading into tomorrow.